Good Thursday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The pound rallies as Bloomberg learns a US-UK trade deal is set to be announced today. President Trump says the agreement will be the first of many. Rate relief for the UK with the Bank of England expected to ease policy later. But in the US, Fed Chair Jay Powell says he won't be rushed into rate cuts.
We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low.
Plus, more chips, please. Nvidia jumps as Bloomberg reveals the White House is set to ditch Biden-era restrictions on AI semiconductor exports. We are expecting some breaking lines from AB InBev. That stock is up about 20% year to date. When they cross, we will bring those to you, of course, the maker of Budweiser and Beck's. We're going to cross over now in terms of the touch on the broader markets, with the sentiment coming through, of course, in terms of the uplift on the news that we are expecting a US-UK trade deal to be announced later today by President Trump. That is according to the reporting from Bloomberg. Whether or not this then leads to a cascade of additional deals, for example, between the US, India, Japan and South Korea, is potentially the most consequential point for these markets. The details, though, of course, of that deal will also be important. So a little bit of trade optimism filtering through the markets today, with a focus, of course, on the pound. We'll get there shortly. European futures, after some losses yesterday, currently pointing to gains of 0.9%. You're set for a positive session in Europe this Thursday on, of course, the tailwinds around the trade story. The FTSE 100 currently at gains of around 0.7%. That is expected in terms of the upside. The BOE is also, of course, a factor, with that rate cut of 25 basis points fully priced by these markets. S&P futures currently pointing to gains of 0.8% after some modest upside yesterday for US stocks. Nasdaq 100 futures looking to add 223 points. Semiconductors and chips will be part of that story as well, of course, in terms of the easing of some of those restrictions from the Trump administration, looking to add more than 1%. Cross asset then, the focus on the pound, 133, strength coming through for sterling, up 0.3% on the trade deal news. 429 on the benchmark US 10-year. Fed Chair Jay Powell suggesting that there is resilience in this US economy, no rush to cut rates from the Federal Reserve, and warning of the risks around inflation and employment. The uncertainty was certainly being flagged by the chair of the Fed, but suggesting that for now at least, the resilience is there for this US economy. 429 right now, with yields up 2 basis points on the benchmark. Brent is trading at $61.50 a barrel, up 0.6%, and gold is gaining 0.7%, close to 0.6% at 3,383 on the yellow metal. Some gains coming through there. We'll see to what extent, though, the upside continues for the pound on the back of this trade deal story. Let's get to the earnings then. Around AB InBev, I flagged that this was going to be an important one for us. The stock is up, as I mentioned, a little over 20% year to date. The top line coming through then in terms of first quarter organic earnings coming in up 7.9%. That is a significant beat on the estimates then. Organic or adjusted EBITDA for AB InBev increasing close to 8%. The estimates had been for an increase of around 3.7%. So on that measure, this is a solid beat for AB InBev. The focus is going to be on the US and China markets, of course, the trade question. The squeeze on consumption, of course, in the US, at least consumer sentiment, will be a factor. So we'll look for the guidance, of course, and the outlook for AB InBev. But on that line, this is a decent beat for the maker of Budweiser and Beck's. Now, to that trade deal, let's get to the details. Bloomberg understanding then that President Trump is expected to announce a trade agreement with the United Kingdom at a news conference later today. Futures then on both sides of the Atlantic, as I mentioned, rising, the pound rallying this morning on that possible trade deal. Let's get the details with Bloomberg's Charlie Wells. Charlie, what do we know at this point?
Well, Tom, this is certainly a symbolic victory for both the UK and the US, and I should really emphasize that issue of symbolism here because the specifics really are not clear yet. But what we know is that the US really needs an off-ramp in this trade war, and this is a way to sort of start that process. We know that poll numbers for the president have been down. We know his handling of the economy has been viewed more negatively recently, and tariffs in particular. Now, on the UK side, the UK has been looking for trade deals since Brexit. Starmer this week just announced, an agreement with India, the largest since Brexit. So getting a lift there. But the issue here is that the UK is still subject to that 10% global baseline. These important, auto tariffs are still subject in the UK to that 25% rate. And there's this looming issue of sectoral tariffs on pharma, too. So still a lot of questions despite the optimism we're seeing.
Yeah, that's really important, isn't it, in terms of the sectoral focus? The autos, steel, do they reduce those to zero? What happens to that baseline 10%? And do they offset or at least sideline the risks around the important pharmaceutical sector here in the UK? Meanwhile, another caveat coming through as we build up, of course, to these conversations between the US and China this weekend, and President Trump being asked whether or not he would remove tariffs on China in the lead up to those conversations. Let's take a listen to what the president had to say on that front when he was quizzed about that.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
All right, there were no ifs or buts. It was a straight no from the US president on that question. And this is something that China has asked for. Remove the tariffs before we have consequential talks. What do we make of this?
Well, look, I think this puts this deal talk in really important context, right? I think you can think of this as maybe a victory in a battle, but not the end of the trade war, of course, right? Because when you think about the relationship in trading between the US and the UK is the United States' 8th largest trading partner. If you want to think about major partners, it's Mexico, Canada, and China in that order. Now, we know this weekend, as you mentioned, that Besant and Jameson Greer are going to be in Switzerland. They're going to be having high-level talks on trade with China. But this is, at least at this point, more about de-escalation rather than a deal with China. So there is still so much more to go. And, I think if we want to think about this UK deal, we can think about it as maybe a framework for possible deals with other countries going forward, but certainly not an end to all of the uncertainty that is still remaining in the economy.
Charlie Wells, thank you very much indeed. Excellent framing of what's happening in terms of the UK-US deal. I appreciate the fact that you're wearing red, white and blue on VE Day as well, Charlie. Thank you for the latest on trade, with a nod, of course, to the conversations over the weekend between the US and China as well. Let's see how all of this ties in then to monetary policy, because, of course, today the Bank of England expected to cut interest rates by a quarter point today. But does a possible trade deal then between the US and UK change the path ahead for the central bank? Bloomberg's UK correspondent Lizzie Burden is here with the details. Lizzie, walk us through what to expect in terms of the decision and the signalling around it in the context of a potential reprieve in terms of these trade tensions.
Well, Tom, this was being framed as the Trump cut, unanimously expected by economists, fully priced by markets because of this growing consensus that the trade war would weigh on UK growth and inflation. In terms of that signalling that you mentioned, we were expecting potentially a dovish vote split, with at least one member of the Monetary Policy Committee voting for a jumbo cut. And we were expecting that maybe the guidance around the decision would be tweaked. So at the moment, they say that the path ahead for rates is going to be gradual and careful. Careful because they needed to assess the economic impact of Trump's trade war. If they drop that, it could suggest that the balance of risks is skewed to a slowdown in growth rather than a rise in inflation. And if they dropped gradual, maybe it would be suggesting that it's opening the door to a June cut, and that would be the first back-to-back cut since COVID, and before that the financial crisis. But then we've thrown this spanner in the works that maybe, as you say, we get this trade deal between the US and the UK announced later today. Charlie gave a fantastic breakdown of what that would mean for the UK economy. Yes, it could be helpful to growth if they're able to mitigate these 25% tariffs on steel and cars, but it looks like they will retain that 10% baseline tariff, so there'd still be a hit to growth. And you're in this global context. If you've got lower oil prices, if you've got China flooding Europe, including the UK, with cheap goods to circumvent its own tariffs, that is still disinflationary. So it may be that the situation for the Bank of England remains complicated by this trade war. In fact, it most likely will do, despite a deal potentially coming today.
OK, that complexity is still there for the Bank of England. Bloomberg's Lizzie Burden with a preview. Thank you. And, of course, we will bring you that BOE rate decision live just after 12 p.m. London time, 12:02 in fact today. And for viewers in the UK, we're going to have full coverage of the Governor Andrew Bailey's news conference in a special broadcast starting at 12:15 p.m. You can also watch live on the terminal and on YouTube. Bloomberg's Francine Lacroix will also be speaking with the BOE Governor Andrew Bailey later. We're going to bring you that interview from 4 p.m. UK time. Markets then welcoming this possible US-UK trade deal. Let's get a deeper dive then on how the markets are adjusting to the latest on trade and bring in Bloomberg's Valerie Teitel. Valerie, talk to us through the prism through which the markets are looking at this. The pound is a clear winner in the session so far today. Are the markets assuming that there are more deals to come? Talk us through the market reaction.
Yeah, look, there is an exuberance in global equities, not just in those FTSE 100 futures, but equities in Asia and S&P 500 futures were trading at session highs, up 0.8%. Tom, there's a lot of questions that could be asked about this. Is this exuberance just because this is the first deal and we're reading through that there are many more to come and maybe quite rapidly? Or are there still some upside to come? Because the UK, frankly, isn't a major exporter to the U.S. The market is really more wanting to see deals with India, deals with Japan, deals with South Korea, those kind of nations who do have a big export to the U.S. But perhaps once we get those deals announced, there could be more upside for the S&P 500. But take a look at what's going on in the pound. We are seeing quite a positive note across UK assets, be it the FTSE 100, be it cable, up 0.2%. Tom, I'm very interested to see how gilts will react to this at the 8 a.m. open for the gilt market, especially the long end. Does the long end take this as a very positive signal for economic growth in the UK? We do want to see those long end yields come down. That would very much help not only the Bank of England, but the UK government as well.
Oh, yeah, indeed. Absolutely. OK, so we watch the gilt markets, of course, and the reaction to this potential trade deal at 8 a.m. UK time with a particular focus on the long end. Talking of yields, the focus, of course, has been on the 10-year for the US Treasury sector. We had the decision, of course, from the Fed, as expected, keeping rates on hold. Jerome Powell saying he is not going to be rushed, despite the pressure from the White House, he's not going to be rushed to cut.
The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve.
So, Val, this is a Fed that is in no rush to cut.
Yeah, that's right, Tom. He actually mentioned the word wait or waiting over 20 times in the course of this press conference and the Q&A that followed. They are essentially on hold until there is further clarity. They did note that there was more risks when it came to upside of inflation and upside in employment. But frankly, those risks have not materialized yet, and they will be waiting patient. I thought there was something very telling. He said at the end of the Q&A, he said, we can afford to be patient as things unfold. There is no real cost to waiting at this point. There's a lot of people out there, Tom, that think the Fed should do cuts preemptively to help the U.S. economy. Powell is clearly saying that is not the case in his mind. He actually did have a more positive spin on the GDP data that came in last week, showing that the first quarter GDP came into a contraction in the first quarter. He said, don't look at that. Look at something else. If you flip on it, I can just show you this chart. It's called real final purchases to domestic consumers. This is something that strips out the net export effect. It strips out that trade imbalance effect because of those front-running the tariffs. And he says, take a look at this data. The U.S. economy is still on a solid footing. We are still growing at a same pace as we did at the end of last year. So quite hawkish spin on the GDP data from Powell. If we take a look at how the front-end rate pricing did react to this, there was really no movement in front-end pricing. We're still assuming 3 cuts from the Fed by the end of the year. That first one now priced for July.
OK, the resilience being seen by the Fed Chair, Jay Powell, in this economy, at least for now. Bloomberg's Valerie Teitel, thank you very much indeed, breaking down what we heard from the Fed Chair and how markets have adjusted in terms of their future focus on additional rate cuts coming through from the Fed. Certainly not priced now. 20 basis points is priced in July, but not priced for June, at least at this point. Coming up, we're going to switch to the banking space and earnings. Sabadell reporting a beat in net interest income. This is a Spanish bank faces a takeover bid from rival BBVA, with all of course, the contentions and tension around that. We're going to discuss all of that with the CEO of Sabadell. He's going to join us for an exclusive interview next. And later, we're going to bring you a conversation with the CFO of German chipmaker Infineon, 6:40 UK time, after the company's earnings drop. Stay with us. This is Bloomberg. Welcome back. Happy Thursday. On the earnings front then, a solid beat coming through for Banco Sabadell over in Spain. Net interest income in the first quarter coming in at 490 million euros, just shy of that. The estimates had been for 412 million, so a decent beat in terms of net income for the first quarter. In terms of what we're seeing on increases to shareholder remuneration, that is being increased 2024-2025 to 3.4 billion. And in terms of what is expected on the targets around 2025, cash dividend of at least the same as 2024. So net income boosting the top line for Sabadell, which, of course, is also facing a potential takeover challenge from BBVA. Let's bring in Kriti Gupta right now, opening trade anchor and someone who has a finger firmly on the pulse of the Spanish economy and the Spanish banking sector, to which, of course, there's a lot of interest. Kriti, we're going to be speaking to the CEO very shortly. But your take on these numbers and how you're thinking about the consolidation story in Spain.
Absolutely. I mean, look, this is a sector that is crucial at the moment when it comes to really building up not only buyback, but shareholder returns after a little bit of a drought for several years. So the idea that Sabadell is able to continue to deliver on those numbers and actually increase that remuneration is crucial. OK, so a beat on net income and a beat on net interest income, a solid beat on that line, 1.56 billion euros. Let's bring in the CEO right now, César González-Bueno, the CEO of Banco Sabadell, for an exclusive conversation. Sir, thank you for joining us this morning. How does this set the bank up for the quarters ahead? What are you seeing in the current quarter right now? Can the net interest income story continue to support the numbers going forward?
Well, the net interest income is resilient despite the turmoil in the interest rate environment. And our net profit is 58% up, which is solid. I think we have been, for the last 4 years, quarter after quarter, delivering and over-delivering over our numbers. And that is what has made the bank revalue by ninefold in the last 4 years. Looking forward, I think we haven't reached the top. The transformation of the bank has been phenomenal. We are still growing very handsomely, 5% on the asset side, 6% on the liability side. And the cost of risk, all the lines of the P&L are fantastic. It's the top line, it's the cost of risk. So we're looking at the future with optimism.
What are you factoring in terms of the trade war impact at this point?
I don't think it's going to be very relevant for Spain and even less for Banco Sabadell. I think the impact might be of a secondary level. What is the impact it's going to have on the interest rates? But we've seen the Fed holding up today, and let's see what it has to bring. But nevertheless, we are resilient to lower interest rates. Our fees are going up, and the whole P&L is working very well and very resilient, and in a very safe environment, because Spain is in relative terms less affected by the trade, because we are not a very strong exporter to the U.S., and we are very local, although we help our SMEs in the export activities. We are quite local, and in that sense, Spain is performing well. The GDP is growing more than the rest of Europe, and we are, for once, in relative terms, because everything has to be relative. We are in relatively calmer waters.
César, let's talk about the takeover bid that you're facing from your rival, BBVA. In the last, I want to say, couple of weeks, we've had plenty of developments on this front, including approval from the CNMC, but ultimately a public hearing from the Bank of Spain set for the likes of May 16th. I want to dive into a little bit of those details when it comes to the remedies that were put on the table, talking about a limit on the bank closures. That's a key part of the synergies that they've talked about in terms of this potential acquisition bid. My question to you, César, is how far can the government go in terms of changing these remedies? Have they spoken to you about it?
Well, I think what you have to understand, and it's very difficult to do it from afar, is that there is a social uproar against this deal. And why is it? And why 80% of the employers' associations all across Spain, why the main trade unions, why everybody, all the political parties, left and right, are against? Why is this? Well, it's because 1 in 2 SMEs are clients of Banco Sabadell in Spain. And the thing is that we are very much of an SME country. In terms of our GDP and in terms of our employment, it reaches quotas of around 70%. The disappearance of these very large from an SME perspective in Spain bank has created a huge reaction, and it's unanimous. And therefore, we can expect that there could be further remedies, but it's for them to decide and not for me. But it is not only a political element, it is mainly a social element, a social reaction.
César, understandably, and look, this is something that they have addressed when it comes to the amount of branches and the concentration that Banco Sabadell has in Catalonia in particular. Talk to us about the clarity around whether or not a legal merger is still on the table. Analysts would say that a legal merger is the only way that these synergies that BBVA has outlined would make sense. But I believe Banco Sabadell's asked the government of whether that's on the table. Did you get an answer to that? Do you have clarity on that front?
I think the government is looking at everything. It's talking to a number of parties. It even has done a public consultation, and we have to see the result. And it will come relatively quickly. In 1.5 months or so, we will have the response. It's not for me to speculate. But there's another element that I think it's even of larger importance. You have to understand that a year has gone by since the 29th of April of 24, when BBVA started with this deal. And what is very relevant when you do a trade shares for shares is what is the relative value of the shares. No, BBVA has done relatively well, 23% up, but this compares very weakly with the 48% up that Spanish banks have gone up, and we have gone up by 60%. So the value of the currency of BBVA is very weak at this time. And it's very explainable. It's because it's mainly a Mexican bank. It's mainly a development markets bank. It's not a European bank. European banks have also gone up by 40%. Yeah.
César, with respect, that stock performance, a lot of that has the M&A arbitrage that's baked into it. But I hear you in terms of the outperformance, because it's no secret that Banco Sabadell has done well. This morning's numbers are a key example of that. But my question to you now is in terms of the actual offer when it comes to the bank. There's a question here of why Banco Sabadell rejected the offer in the first place, and it was because you didn't think the value was high enough. So my question to you for shareholders that are watching is simply how big is the room now to include or to increase the financial and dividend goals that you've promised?
Well, our dividend goals are very, very strong. If you realize that in the last 2 years, including 24 and 25, we are going to distribute, as was said before, 3.4 billion out of a market cap of 14 billion. So that's extremely handsome. And that is going forward because our ability to generate capital is very, very strong. We are focused on returning capital to our shareholders in growth and in a very safe environment. So that's what they can expect, a very, very handsome return.
Okay. César González-Bueno, CEO of Banco Sabadell, thank you very much indeed, alongside, of course, Bloomberg's Kriti Gupta from our opening trade. Plenty more coming up. Stay with us. This is Bloomberg. Pakistan says it reserves the right to retaliate further after India launched what it called targeted strikes on terrorist camps in Pakistani territory. Pakistan's army says 31 civilians were killed in the deepest breach of its territory since the two countries' war in 1971. India, meanwhile, says it conducted a precise and restrained response that was designed to be non-escalatory in nature. Coming up, German chipmaker Infineon set to report earnings in the next few moments. Going to break those numbers ahead of an interview with the company's CFO. That is coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The pound rallies as Bloomberg learns a US-UK trade deal is set to be announced today. President Trump says the agreement will be the first of many. Rate relief for the UK with the Bank of England expected to ease policy later. But in the US, Fed Chair Jay Powell says he won't be rushed into rate cuts. Plus, more chips, please. Nvidia jumps as Bloomberg reveals the White House is set to ditch Biden-era restrictions on AI semiconductor exports. We are going to bring you some news on the chips front shortly with Infineon. But right now, on the defense space, Rheinmetall, that stock is up 165% year to date. Top line coming through on first quarter earnings. Sales coming through with a beat for the defense contractor over in Germany. Rheinmetall's first quarter sales of 2.3 billion euros. That is above the estimates of just shy of 2 billion. So a solid beat in terms of first quarter sales for Rheinmetall. Operating profit up 49% in the first quarter, year on year, coming in just shy of 200 million euros. The operating margin of 8.7% in Rheinmetall in the first quarter. This company, of course, consequential and a deep focus given the switch around the fiscal spend on defence, of course. We're waiting for those Infineon numbers to drop. We will bring those to you when we get them, of course. Let's bring you the broader check on these markets with the moves around trade leading to some optimism in the equity space, and the gains for the pound have moderated slightly as we await more details, of course. European futures looking to gains of 0.9% after ending the session in negative territory yesterday. FTSE 100 futures then, with that picture around a potential US-UK trade deal, currently looking to gains of 0.8%. S&P futures stateside looking to build on some of the modest upside of yesterday, looking to add 44 points. NASDAQ 100 futures with the semiconductor story as well, and the changes around restrictions also a factor, looking to decent gains of a little over 1% so far for that tech-heavy index. Let's flip the board and have a look cross-asset with a focus on the pound. I mentioned the strength that's come through there on the back of this trade deal reporting. That has ebbed slightly, but the pound is still up 0.2% at 133. The 10-year is yielding 4.29 right now, just below 4.30 then. Yields are up 2 basis points. We heard Jay Powell saying he is in no rush to cut rates. $61 a barrel on Brent, and gold is currently up 0.4%. Let's bring you the numbers from Infineon now then. Of course, the German chip maker, industrial chip focus, of course. They now see 2025 revenues slightly lower year on year on the tariff effects. So the tariff effects are being felt by Infineon. They have revised lower their revenue. Now see it lower on the tariff effects. They see full-year segment result margin in the mid-teens. That's at a percentage level. Third quarter revenue expected to come in at 3.7 billion euros. That is below the estimates of 3.84 billion. So they are guiding to third quarter revenue slightly softer than the estimates. We're going to be bringing you an interview with Infineon shortly. Before we get there, though, let's get to the gaming space, and big deal in the European gaming space that we can get some details on right now, because mobile game developer Tripledot Studios has bought AppLovin's games portfolio for about $800 million. The deal means London-based Tripledot, the company behind popular games including Sudoku and Solitaire, will take control of another 10 studios across key markets in the US and Asia. Very pleased to say joining me now is the co-founder and CEO of Tripledot Studios, Lior Shiff. Lior, thanks so much for coming into the studio bright and early. How important is this deal for you and the business? Yeah, and how does it position the company going forward?
Yeah, thanks for having us. Yeah, super excited to be here. This is a transformational deal for us. I think we are moving, on the back of this deal, we're moving from being a fast-growing, high-performing challenger in mobile games to a global leader. Before this deal, we entertained 12 million people every day, and I guess on the back of this deal, we're going to more than double that to 25 million people. And those numbers, just to help you, I guess, maybe visualize them, I think I'm personally a football fan, and although I'm also an Arsenal fan and a little bit sad today.
Yes, as am I.
I think so. It's almost 280 full Wembley Stadium worth of people that play games every day.
OK, that's a nice way to kind of picture how many people are playing your games. So this is transformational for the business, based here in London, a success story clearly for the UK. Where does this set you up in 2 years, 3 years' time? Are you taking on the likes of Tencent and some of the major game publishers globally then?
So we're definitely a global company and becoming way more global, and we do have global ambitions. I think that did move us to be, I guess, competitive with some of the largest names in mobile games, and we're very proud to do that out of the UK.
Are you looking for other M&A opportunities?
So this is our fourth deal, and not the last. That being said, it's the largest one by far. So I think it will take some time to, I guess, digest this deal. But down the line, of course, I think we'll look for other exciting opportunities.
What are the key markets for you right now in terms of the upside growth that you're seeing?
As far as our user base, our biggest market is the US as far as revenue. That being said, we're a global business. We have players from 180 different countries playing our games. And now, again, the back of this deal, our team is global. We've been global before with teams over 6 countries, but now we're going to have offices in 23 different countries around the world. And really for us, it's about access to the best talent, the best game creators around the world. And now we feel we have the ability to get the world's best developers, the best game designers to join us.
We've seen a convergence to some extent of mobile gaming and commerce, mobile gaming and media as well. Are you looking to push into different segments?
At the moment, we believe that we are experts in mobile games, and we want to stay focused on mobile games because that's our area of expertise. And this is the fastest growing, the most exciting part of entertainment. So games is actually the biggest segment of entertainment as far as revenue, and mobile games is the biggest part and fastest growing part of that. So we're very happy being focused on mobile games at this point of time.
What is AI doing to the production of games and the personalization of games?
Yeah.
Can you cut back on designers and developers? How are you thinking about integrating AI, and how does that change the gaming experience?
So this deal actually allows us to double down our investment in AI, which we're very excited about. We use AI in 2 different ways. One is to help achieve more efficiency in production of games, and we've been doing that for the last year and a half. This is in areas like art, like video, for marketing, everything from there to customer support, narrative design. But we also do, which is we think we are really one of the market leaders at, is using AI to personalize the game experience, using machine learning to make sure that each of our players, each of our 25 million players, actually is enjoying a tailor-made experience that they enjoy the most. So really, in the back of this deal, because we'll be a much larger company, we'll have the ability to actually invest more and support all of our studios to have the world's best AI, machine learning technology to power our games.
How is the UK set up for this kind of expansion? You're based here, you set up in 2017. Is the UK still a good place to operate? Are you thinking about moving headquarters? Is there more that the government can do to support your industry?
Yeah, well, I think we are very proud to be based out of the UK, and I think the UK is a great place to have access to talent and a great place to attract talent too. But we've always been a global company. We started very early on having offices and talent around the world, and our user base always has been global. But we're very proud to represent the UK and to have, I guess, another European success story going global.
Okay. IPO, listing, is that on the agenda now? You're expanding rapidly, you've got that user base, you're profitable.
Yeah, so we've been profitable for many years now, and which is great. I think one of the nice benefits of mobile games, it's a very cash-generative business.
Yeah.
It will be even more on the back of this deal. I think we believe that if we build a great business, we'll end up having a great outcome for our shareholders. This deal does allow us, and we move to the scale that will give us the optionality if we decide to, when the time is right, to go public. Although that's not on the cards for not for the next year for sure.
Not for the next year. Would you pick the UK as a listing destination?
I think we'll explore all options when the time is right.
Okay. A lot of people would say that the UK, it would not make sense in terms of the valuation that a company like yours would get, and the US would make a lot more sense still, despite the changes here. I mean, is that generally how you'd be leaning?
I will say that at the moment, the market leaders are listed in the US. That is correct. But we'll explore all options when the time is right.
Okay. Congratulations on the deal. $800 million deal, approximately, for AppLovin's gaming unit, of course. Thank you very much. Tripledot's CEO and co-founder, Lior Shiff, joining us on the back of that transformational deal for the business, as he has described it. Let's get you to the earnings story around Infineon then. I mentioned these names, of course, the lines crossing around the adjustments to the view 2025 for this industrial chip maker. They now see guidance in terms of the sales guidance, missing estimates on that tariff uncertainty. So we had seen signs in some areas, some pockets, that maybe industrial chip production and demand was starting to turn around, but the uncertainty as a result of these global tariffs, the tariffs imposed, of course, by the Trump administration, is taking its toll, it seems. They now see third quarter revenue in Infineon of 3.7 billion euros. The estimates had been for 3.84 billion euros. In terms of the third quarter, that revenue picture then missing the estimates. On the margin story, they see second quarter segment margin at 16.7%. That's just above the estimates of 16%. Let's take a listen to the CFO right now, speaking to Guy Johnson.
We came in with Q2 absolutely in line. Now the question is about running quarter Q3 and Q4, and you know that under German corporate governance, we are obliged to not only give a quarterly guidance, but a full year guidance. And we do not see anything of a tariff impact in our numbers yet, number one. Number two, we do not get any feedback from our customers, which leads to that belief. So that's the baseline. Now, there are two things which we had to deal with and which we have baked into our forecast. The first one is currency. The dollar is much weaker. We had previously guided for 105 euro dollar. Now it's between 110, 115. Honestly, I don't know where it will be. So we just took 112.5 as a midpoint. That gives us a give or take 400 million revenue headwind in the second half. And then there is the tariff uncertainty. And I repeat and stress the word uncertainty. We believe it's likely that there will be a negative impact on demand in the next quarters, although we do not see it in the numbers yet. And therefore, we have made a guesstimate. It's no calculation because we don't have the data. It's a guesstimate of a potential impact. And we guesstimate that at 10% of our Q4 revenues, which translates, give or take, into 400 million. So if this is coming, yes, then we include that in our guidance, and then the guidance compared to last year is slightly below, indeed.
Okay, let's break that down into two component parts, the foreign exchange story and also what's happening with the tariff story. Let's start with the tariff story. Are you surprised that you haven't seen a slowdown in orders yet? Because I keep seeing numbers coming through, particularly from the automotive sector, where you are strong, where we are basically seeing the auto companies saying, we are withdrawing guidance, we don't know yet. So what you're saying is that at the moment they're not indicating in their orders that they see a slowdown, but they are indicating in their guidance as well that they anticipate that it's coming. But do you think that is where the challenge will be?
That's one of the challenges, Guy, but there are three things which I would like to add to your question or statement. Number one is, for us, automotive is a global market, and we just recently saw the 2024 numbers where Infineon has moved up even further. We are now either number one or number two in all globally leading car markets. So even if there is a little bit of a weakness in some market, let's take the US, there is still strength in China, and we can offset that. That's number one. Number two is the number of cars being produced is an important data point. Don't get me wrong, and it has just been lowered by S&P to 88 million. But even more important than that for Infineon is the content per car, where we are seeing more and more software, infotainment, autonomous driving, and so on. So even if the number of cars remains stable, we can grow our business. And number three, indeed, we are not seeing that in our numbers yet, but we also have to reflect the fact that our year end is end of September. So we are pretty close to the year end compared to others who have end of the calendar year.
Let's come to the foreign exchange story. So you've moved from 105 to 112.50 in terms of the number you're plugging in euro dollar into your calculation. What I'm hearing is that we could see a euro dollar at 120, 125, 130. How big a shift could we potentially see in your numbers if the trend of a stronger euro continues? Just how big an effect is it having? What is the effect into the bottom line?
Yeah, so Guy, I'm now 30 years in that environment. I've given up in really making currency predictions. It's not possible. But the magnitude is we have this rule of thumb that per every cent to the dollar change, we are winning or losing, depending, of course, on the direction. 25 million of revenue per quarter, and that's why these 7.5 cents from 105 to 112.5. They lead to, give or take, close to 400 million. So if you now go to 120 to take your number, that would be another close to 400 million revenue headwind for the second half.
OK, Infineon's CFO, Sven Schneider, speaking to Bloomberg's Guy Johnson, the industrial chips maker, of course, out of Germany. Some other lines crossing on the back of these numbers from Infineon. They plan to create as many as 1,000 jobs in Dresden. They will be investing €5 billion in a plant in that city, a Dresden plant. They have been given approval from the German government for a Dresden plant funding plan, and they plan to invest €5 billion and hire around 1,000 people in that city. We're going to get more on the chip sector because coming up, Bloomberg learns that the Trump administration is planning to scrap some Biden-era AI chip curbs, potentially deeply significant for the chip sector. The details on our scoop are next. This is Bloomberg. Welcome back. Bloomberg has learned that the Trump administration plans to rescind some Biden-era AI chip export curbs. This comes as the US and China prepare, of course, for trade talks this weekend. NVIDIA and AMD gaining on that news. Let's bring in Bloomberg's intelligence's senior analyst, Robert Lee, for the details. Rob, what prompted this potential policy reversal from the Trump administration then?
OK, well, the policy was originally proposed by the Biden administration in its dying days, if you want to put it that way. But it met with some howls of protest from both the industry itself, NVIDIA in particular, which would be quite negatively affected by its impact, and also by some third-party countries, particularly in the Gulf region, that would have been impacted by it. Because arguably the legislation or proposed legislation was quite rushed and quite broad brush in its approach. So I guess a more focused approach is probably what we're going to see from President Trump.
OK. Is that more focused? As you sit there in Hong Kong, Rob, you have that finger on the pulse of what's happening in terms of China and its AI and chip industry. Is a more focused approach likely to be positive then for China?
I think in the near term, a reprieve may give some short-term lift to things, but the direction of travel is obvious. China is the main rival in terms of global AI. It's a two-horse race between the US and China at the moment. Obviously, China's looking to go more self-sufficient on the technology front, and it's up the ante, given the rising geopolitical backdrop or backdrop of big geopolitical tensions. So I think China will remain at the forefront of US focus on technology restrictions, if that's the right way to put it. But again, it's to try and take a more focused approach. I think there's been anecdotal evidence and even some harder evidence that some third-party countries were giving a helping hand to China, but then others were potentially caught in the crossfire. So I think at the end of the day, America still wants to export its AI technology to those companies, or countries, I should say, who are legitimately using it. There's a substantial end market, particularly in the Gulf region. You think of countries like Saudi Arabia and UAE, which are, looking to invest not just billions, but potentially trillions in their AI infrastructure. So that's a huge market opportunity for US firms.
Yeah, and this, of course, coming ahead of that visit to the Middle East by President Trump. So you have to wonder if the timing is somewhat aligned to that visit. Rob, if we take a step back, who do you expect to be the likely winners and losers then at this point?
OK, well, I guess the focus of attention is always on NVIDIA, isn't it? So we recently saw the banning of H20 chips into China. But I think equally you heard Jensen Huang stand up even earlier this week talking about a potential $50 billion opportunity for AI hardware in China. And this is a conflict at the heart of this, isn't it? We've got the geopolitical and political tensions, and yet China's population of 1.4 billion, or it's still, or I should say 1.4 trillion, it's still a substantial end market. So I think within the rules as they exist at the moment, if American companies can find a way that satisfies the Trump administration to access the huge market opportunity in China, that's definitely what the likes of NVIDIA want to do. So I think there are potential options open to NVIDIA at the moment. Maybe they can look to license their technology in. Maybe they can partner locally with someone. But again, that would need to be rubber stamped by the White House. So a reprieve is a near-term positive. But I think the direction of travel, again, is it's a two-horse race, as I mentioned, between the US and China at the moment. So I think still the US is going to do everything in its power to forestall the ongoing development of AI technology within China as its main geopolitical rival.
Okay. Bloomberg Intelligence Senior Analyst Robert Lee in Hong Kong. Thank you for the context around that news. Some adjustments in terms of those restrictions around semiconductors, particularly focused on AI coming out of the US. Sticking with chips, ARM shares fell in late trading after the chipmaker gave a disappointing sales forecast for the current quarter, stoking concerns about a tariff-fueled slowdown for the wider industry. The company blamed the conservative forecast on the timing of new agreements with customers. CEO Rene Haas says ARM is in the process of closing licensing deals and wants to make sure they are signed before it adds the revenue to its outlook. Plenty more coming up. We're going to break down what to expect from the Bank of England and update you on what we heard from Jay Powell at the Fed. This is Bloomberg. So, Fed Chair Jay Powell not sounding like he is in any rush to cut rates. He says job creation is fine, wages are fine in the US, pointing to a relatively resilient US economy, at least for now. The uncertainty, of course, is there, and he touched on that, and he put it back in terms of the Trump administration and what the White House plans to do on trade and tariffs. So they kept rates, of course, in that range, 425 to 450, as fully expected. Markets did adjust somewhat on the back of this. You're now priced in about 20 basis points of cuts in July and about 70 basis points, so 3 cuts in total, additional cuts by the end of this year. So a little bit of pairing on some of the expectations around the Fed, as Jay Powell talked about, a relatively resilient US economy. The risks, of course, to the employment picture as well, pushing out, and inflation. Let's flip the board and have a look at the BOE, which is diverging, at least for now, is expected from the Fed. So how long can that story continue? Expected, of course, fully expected to cut today with 25 basis points. The market's pricing in around 90 basis points by the end of the year, down to 3.5% by December of this year. This is the first update as well from the Bank of England since those tariffs were imposed by the Trump administration. You have the additional factor of this possible UK-US trade deal, but you'll get the updates in terms of the forecast on growth and inflation from the BOE alongside fully expected that cut. Again, market's pricing in around 90 basis points by the end of the year. Let's just quickly reflect on the market reaction to that. The pound has gained on the back of that news around a possible US-UK trade deal, but that gain has paired somewhat. So you're seeing the lift in terms of FTSE 100 futures, looking to gains of around 0.7%. We're going to bring you the BOE rate decision, of course, live just after 12 p.m. London time. The opening trade is up next. Stay with us. This is Bloomberg.